There are two major trades or setups that happen almost every single day, and you can trade them and make money off them. One in the London kill zone and the other one in New York kill zone. You can use any strategy or any entry criteria to enter the trade, as this will be only a framework to look for every day. If you appreciate my content, share the video and hit the like button. Let's get into it. So starting with this, I've been trading Euro USD for a long time now, and every day when I come to the chart, I want to see something that is very specific. And that's what I'm trying to teach today. Now, a lot of people would say, okay, we already have a lot of strategies that I published personally and we're using. So we are confused on which one to use. Now, that's not the thing that I'm doing today. I'm not giving you a new strategy because let's say you have an entry criteria, which is, for example, a CSD, for example, change state delivery. You enter based on this candle. But the thing that I'm going to teach you today is when to look for this entry. So that's the thing. It's a framework or context instead of just an entry criteria. So that's what I'm going to be focusing on today. So basically we have two potential trades a day to enter off, one in New York kill zone and one in London kill zone. Those are the trades that I really look for. Those are going to be the cleanest trades that you're going to see. The first one, actually, let me just start with this. Okay. So the first of the day from 20, which is 8 p.m. to midnight, all in EST time. This is going to be your agent session, and most of the time it's going to be a consolidation. And let's say in a bearish example, here is, let's say, midnight open, right? So that's midnight. The price started to go where? So we're going to be starting to go up, sweeping the Asian high, and then let's say no breaker structure, and then again another sweep and a breaker structure. Now this by itself, when it happens at the right time and the right place, what I mean by the right time, the time for our manipulation. So most likely from 1:30 a.m. to 3, or it could be extended to 4 a.m. All of those times that I'm mentioning are in the New York time zone. Now, most likely I want to see this if it wants to be on the highest probability, right? If you want this to be the highest probability trade, then this needs to be happening inside of a PD array on the high time frame. So this is a high time frame point of interest where price actually reverses from on the London kill zone. And actually, if you want a full video about this setup in details, I've already published a video about the London strategy. Watch that video. Now, as soon as price comes to that area, we have different ways to enter this trade. That's your first trade, which is simply the sweep of the Asian session inside of a higher time frame PD array. That's your first trade. And either you enter aggressively from here or you wait for price to break structure and come back into the range, right? So different ways to trade this. But again, I'm not going in details about this. I have a full video about this. But what is the advantage of just seeing this, right? When I see this and then let's say price continue going lower and then almost New York is about to start, this right here, this high is now a Judah swing or manipulation or deviation, whatever you call it, right? This manipulation here will actually tell me what the bias is. The bias is always on the opposite side of the manipulation. So manipulation to the upside, then that means bias is going lower. So we are bearish. So this manipulation here is very important to note, especially when it happens inside of a PD array. And why is that? Because a lot of the time when this happens inside of a PD array, it's telling me nothing but that all of this is a market maker's model to go lower, maybe to this low or a low that is lower. And that's a market maker's model on the higher time frame. So something like this, we have this PD array here, come into that PD array. And now we have what? A move of internal to external to this low. So taking this low, which could be this one or another one. And also just looking at the 4-hour to see this, because we have a 15-minute market makers model. It's going to be a PD array on the 4-hour time frame. And I have a full video about market makers model. So this manipulation by itself is going to, first of all, give you the first opportunity of the day on the London kill zone. The second thing is telling you the bias. So now I'm going to be looking for price to continue lower even on the New York kill zone. And what is the thing with the New York kill zone now? How do we look for an entry? First of all, a market structure shift should be happening here. So there needs to be a market structure shift in order to validate this as a manipulation to go lower. But for the entry, you can actually enter here immediately without a market structure shift. But for the bias, you need to see a market structure shift in order to validate this as a Judah swing to go lower. So that's the first thing. So now we know that we're actually hitting lower. Now we have our Asian session low right here. There are two scenarios. The first one is price not taking that low inside of the London kill zone. Here we start the New York kill zone. We did not take the low in the London kill zone, which means that most of the time we're going to take it in the New York kill zone. So we're going to be actually retracing here to go lower and take that low. Now there are some scenarios where actually in that London kill zone we'll be taking that low. So we're gonna go lower, 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 and we're gonna take that low and expand below it. If this also happen, that means that this is not the low of the market makers model. There is a low that is below, or the main drawn liquidity, or the main fair value gap could be here. And that's why in the New York kill zone, what's gonna happen again is the same thing. Retracing up, coming lower to that. That's gonna be the ultimate target. So either price expanding and actually breaking through the Asian low, or not taking it and taking that level on the New York kill zone after. So two scenarios here. Now all of this is going to be very simple when I look at the examples, but let's say it's not taken, right? And we have the market section shift and everything, and we have, for example, the starting of New York kill zone here, right? So let's say Asian, London, and New York. What I want to see is two things: either price coming back to OTE, which is if I grab my fib from the high, the Judah swing, to the recent low, for example this one, because this one did not retrace to OTE, then take it from here to here, and we can see that price did not retrace, and then it was going up from here, and then retracing back to OTE, going lower. So that's one entry. It's price coming back to OTE from the price action leg that we're having here. Price coming back, or it could be just a regular fair value gap or a sweep of liquidity. So you see, sweep of liquidity, continuation purge to go lower. Different types of entries to use here, and we're going to go over them. But this is your framework of the day. You see, Asian session being here, London kill zone trade is the sweep of liquidity of the Asian session, and then establishing the bias based on this manipulation here. We start to go lower. We know that because we did not take any major liquidity level, then we're going lower. We could take a continuation on the New York kill zone, going up, either coming into a fair value gap, into OTE, or a liquidity purge going lower, right? All of those scenarios. Now you could look at this, the same thing in a bullish example, just upside down. Now there are times where this is not going to be happening. And when are those times? When we don't have a clear, for example, point of interest here, then it's not going to be as clear as this going in one direction. When we also don't have a breakout structure here, you see, for example, something like this, we don't have a clear breakout structure here, then most likely price is going to go up and take that high again. A lot of different scenarios here, and we're going to go over them, but this is sharing my experience here. You could have 2 trades a day using this framework just by itself, and you're going to trade the London kill zone, set alerts, see how it goes. You're going to come back on the New York kill zone, again set alerts and see how it goes. All the examples are going to be on the euro dollar, right? Because this is the pair that I trade the most, and I really want to be relevant here. I want to share things that I see every day. So those are the things that I discuss in Discord almost every day. Those are the things that I look for and trade every day. So we're going to start from today. This is the current price action, as you see. What happened here is, now the first question is, do we have any higher time frame PD array below the Asian session in this case? Because that's where price was going to, and this is where it looks like it was going to. So below the Asian session, do we have anything? We're gonna go start with 4-hour time frame. And what I was seeing here is actually we had nothing. We had nothing, no fair value gap, no order block, nothing except this low that is here. So we have a 4-hour low, fractal low, right? Coming back to 15 minutes. This is the only PD array that we have, is a low liquidity level. And what do we have here? A small fair value gap. It doesn't really matter that much. There is also a low here, so almost equal lows. This is the New York kill zone low, the previous one. Now, how do we trade this? Now, this is the thing. We look at our Asian session and we look for a deviation above or below. In this case, it was going below. We have a PD array here. When it was taken, we have an immediate reversal that happened. Not a reversal, but a sign of weakness that price cannot go lower no more. Now here you could look for change of state delivery on the lower time frame. You could look for a creation of fair value gap on the lower time frame or the same time frame. You could actually apply my turtle soup strategy that I uploaded previously, right? So different types of entries here. I don't want to talk a lot about the entry criteria here. All I want to mention is how to look for our framework. So you see the creation of this low, a creation of a fair value gap, even though there is no displacement above this high. But what happened is we have this fair value gap as well as this fair value gap. Both of those fair value gaps, we actually closed above with a fair value gap, which means that we have an inverse fair value gap now where price comes back to and started going up. We have this big range. We can expect price to come lower into OTE to go higher again if the main drawing liquidity is not hit. So let's ignore this for now. Go to the previous example. I want to show you this one. We had an agent session, deviation to the upside, right? So that's a deviation here. What this tells me is that, okay, we are going lower. And that's what happened. We started going lower. But the thing with this is that we did not actually give a market section shift until where? So no market section shift here, actually one here. And then price in this price action leg retraces up here. Now let's take a look at this. In this price action leg, actually from here, first of all, to here, that's an OTE. But we want to look for an OTE on the New York kill zone. So from here to here, an OTE is right here. And we have no fair value gap here actually on this price action leg because price was going up, just respecting all fair value gaps. And what happened here, sometimes it gets tricky. That's why you want to build experience based on this. What happened here is a price sweeping this high and then going lower. So sometimes it gets tricky, but there are some times where it's actually very clear. For example, here, we can see that. And if we switch here to, let me put a line here, go to 4 hours, see if we have anything on the higher time frame, right? So right here, we can see that we actually have this liquidity level here. So 4-hour high again, the same thing as happening today. Now back to 15 minutes. What I see here happening is that we took that 4-hour high right here, and the same thing, it's what? A previous kill zone high. It's the New York high, right? So price was coming here. So agent session was here. We start going up. Now all I want to see is what? A liquidity sweep above that agent high into a higher time frame level, then going lower. I want to see, preferably a market section shift in order to confirm that this is our bias. When I see this, so you see, price did not go to that higher time frame level, started going lower, but still there is no clear market section shift here. We did not close with the displacement below this low, for example. And then we kept going up into the higher time frame level. We started going lower. There is this market section shift here on the New York kill zone. So if you were able to enter here based on a change of state delivery, then yeah, you get your entry. But this breakout structure here confirms what? That we actually have this high, most likely a high of the day, right? We have this as a high of the day. And all I'm going to be looking for the rest of the day is shorts. That's your framework, right? This high here, Judah swing, confirms your bias for the rest of the day. We started going lower. We had a fair value gap here to enter from. That's on the lunch break. We started going lower. At the start of the New York kill zone, we pushed and we broke structure. Now, from this level, which is our Judah swing, from the high to here, we did not retrace to OTE. And to here, no OTE. Now here, we see that as we came to this level, we started pushing higher a little bit. So now we can apply our fib. And by applying the fib, what we can see happening is actually price coming back into a fair value gap, which is this one here, which has an inducement inside, sweeping that level into 61 and 70.5, which is your OTE zone from here to here. That's your OTE zone. And that's where price reacted from, started going lower and going where? To your 4-hour low. So you remember this 4-hour range or this 4-hour candle? We took the high of the candle and we went all the way to the low of the candle. So that's your drawn liquidity here. It's not the main one, but it's the major one compared to this one right here. Compared to the deviation that happened, this is your drawn liquidity. Now, this is one trade. Now, when we look at different examples, for example, this, we can see that we started to go higher, but there was no major market structure shift. That's why this was not the high of the day. And there's some high impact news, so not really comfortable trading this day. Taking a look at this one, what do we see? Again, the same situation. We're going lower into a big fair value gap here in the 15 minutes, but then no major market structure shift. We came lower. We were not able to break above a level. And what happened here is sweeping the London low. This also could happen, but this is not the framework that I want to go over today. But this could happen because we did not break structure and we have this Asian high, staying here. That's why we started going higher to it in the next day. But we're not trading this. I don't suggest trading this unless you were able to, have experience on it. Now, what we see here is this is the framework that we're having. What happened is we have this Asian session. We have deviation below it. Now we could go to 4-hour, 1 hour, see if we have any fair value gap. Most likely you have this, you see, those two consecutive fair value gaps. with an inducement inside of them right here. Now you could look for a turtle soup entry here based on the strategy that I uploaded, or you could take a change of state delivery here, or you could wait for retracement. So you see what happened here is not price going up and staying here for some time until the New York started. No, we're actually pushing up aggressively and closing with the displacement above the Asian high. And we have another drawing liquidity, maybe somewhere in here. We have actually a 4-hour fair value gap here. So we're willing to go up. What happened here is this Judah swing tells you what? That we are to push up. That's the bias. That's the bias here. This low tells you that, okay, all day we're going to be looking for longs. And you see, we started going up. Then the kill zone ends here. We wait for the New York kill zone. What happened is if I take my fib from the low, which is our leg, to the high, which is right here, what happened is what? Price coming back in the New York kill zone into 70.5 or 61, right? So the OTE zone again from here to here. And that's where price started pushing up. Let's say you did not catch this one, and we know that because we created this Judah swing, we are pushing higher because that's the bias for the day. But remember, the manipulation will always tell you the direction, and the direction is always on the opposite side of the manipulation. Now you could take your fib again from this move to this move, and you'll see that another OTE is offered here. A perfect one again to what? 70.5. So again, 61, 70.5. That's your OTE going up from here. Now you see the times where we don't have actually a clear market section shift, that's the time where this doesn't work. Now there is another scenario that I wanted to mention, but I don't recommend trading this because it's not as clear as the others, which is price, as we have this Asian session, marking this, now looking at this Asian session, taking my fib from here to here, from the high to the low of the Asian session, we can see that neither the high or the low were taken. But what happened is we have a fair value gap here and another fair value gap below. So 2 consecutive fair value gaps here. And price actually reacted off the 50% of the range, of the Asian range. That's a very crucial level in the Asian range. But what happened after is price going above without taking the low. So we're not taking the low, but then just simply expanding above the highs. We could actually follow that direction because that's now a real breakout. But again, you could go wrong with this. That's why I recommend trading what? This one right here, where we actually take the high or the low, right? But in this case, the high going lower, market section shift. What happened after is price, so we have a fair value gap here. That's your first entry on the Atlantic kill zone. Then the New York kill zone, we had what? A continuation purge here. That's the first thing. But what we could do also is not every time price will come to OTE, but in this time, almost to the 50% of the range, right? Now we have another leak from here to here, which has a fair value gap. We can actually apply this from here to here, and that's where price actually come back to OTE exactly where? 79%. Now you should be experienced when knowing where to actually take your fib, from where to where, right? That's gonna take some experience. And you see, that's the high of the day. That's also the low of the day. This is another high of the day, and we discussed this. This is the high of the day. Now the low of the day, because of the same reason that we discussed. And most likely, this is the low of the day here for the current price action. So this is how we trade, or this is the framework that we're going to go with, right? And you see the same thing here. Randomly, it happens every day. You see, low of the day. Manipulation here, we know that we're hitting up. And we could take what? Fib from here to here, coming to 50%. Now another random 2 examples, which is this one here. Again, a sweep of the Asian low, no market section shift. Another sweep going up, market section shift. This is the low of the day, right? And we started going up, and we could take the OTE, maybe OTE, yeah, almost to the OTE, so 50%, and almost to the 61. We started going higher. That's the low of the day. Now again, the same thing happened here. And just make sure you know how to trade this one on the London. The other one you will actually know, because the one taken on New York is much easier to trade because you already know what your bias is, right? So you see, this time we actually took the low again. We started going up, started coming lower, going up again. So even though there was no clear market section shift, but still we're pushing, and this was your low of the day. Now this happened all the time. You see, sometimes you get a small sweep because of news, because you see this was, I believe, CPI maybe. So you see, times where we don't have a market section shift, we're not gonna put that high that determine the bias. But when we have that market section shift into a higher time frame, that's where the bias is going to be very clear. And you see, very nicely happening here, right? You see, taking the low, starting to go up, coming lower, going up. So clear market section shift. Now you could also take the OTE trade from here to here. Price exactly retracing to 61, going higher. That's your framework. That's the framework you need. Again, happening here. So you see, I'm not picking days. It's almost happening every day. Sweep, creating that low here, determining the bias. Creating a low means that we are bullish. And there you go. Putting that low, going bullish. Now you could also take an OTE on the London by itself. First come into OTE, started going higher and creating that low of the day. Happening over and over. You see? Low of the day, high of the day here, and high of the day here. It happens over and over. So at the end of the video, all I want you to do is pick an entry type or a strategy that I explained, just, using the entry type, using this framework, watching my video about the London sweep strategy or the Asian sweep, and put it all together and trade this. This is, in my opinion, the easiest way to put it all together in a framework. So very quickly, Asian session, deviation on the London session with a displacement, continuation on the London, either taking the Asian low or not taking. I want to see OTE on the New York, continuing lower, taking the Asian low, and then another low here. That's all you need. Creating this high with a market section shift inside of a higher time frame. That's how you're gonna know what your bias is. If you like this video, then make sure to share it with your friends. There might be some people who need it, maybe your friends too. Hit the like button and leave a comment with whatever ideas you're having or any requests. I'll see you on another video. Bye bye.